Good morning, students. So we have seen part 1 and part 2. Part 1 is balance sheet format we have started. This is a format of balance sheet. So we have equity and liabilities first. So in that we have four main headings, that is shareholders fund, share application money, pending allotment, non-current liabilities we are having, current liabilities we are having. Next, again we are having assets. In assets we have only two types. One is what non-current assets, other is what current assets. In non-current assets we are having A to E, and in the current assets we are having A to F. So this is a format which you have to remember. Okay, and after that we have seen revenue account also. We have done problems on revenue account, and we have solved some problems on balance sheet. So today we'll start we will understand in detail what actually is the equity and liabilities. Okay, now see what he says here. So first is share capital. So no need of reading all this. So there will be given the what share capital, and we know what to do with the calls and paid, means calls and arrears. Okay, that we know. Reserves and surplus, we have to see how many reserves we are having here. We are having first capital reserve. Next is capital redemption reserve, securities premium reserve, debenture redemption reserve, other reserves. Okay, so these are the reserves and surplus. Whenever you see in the question reserves, this capital reserve or capital redemption reserve, securities premium reserve, debenture redemption reserve, other reserves, this then you have tried what and reserves and surplus. And he's saying something here. Now understand. Surplus, balance sheet statement of profit and loss, it should be not noted that A reserves specifically investment shall be treated as a fund. Oh, no need. Then debit balance of profit and loss shown as a negative figure. That surplus balance of reserves. Okay, I'll explain you when we solve the problem. That time I'll explain what to do with the surplus, what to do with the loss. If there is a surplus, means profit and loss account, we are getting profit, then we have to add to reserves and surplus. Then when there is a loss, we have to deduct it. That's simple. I'll explain you. No need of this much. Two small paragraphs. Understand, explanation is not required. Next, money received against share warrants. What does it mean? Now we'll see in detail what is the meaning of money received against share warrants. Share warrants are the financial instruments which are give the holder right to acquire equity shares. Okay, so it means what whoever is having this money received against share warrants, whoever is giving this, these are the people who can acquire which shares, equity shares. It means the person whoever is buying this instrument, which instrument share this money received against share warrant is what? It's a financial instrument. Okay, a financial instrument means like negotiable instruments like that, shares, debentures like that. So whoever is holding this financial instrument, that person can purchase what? Equity shares. These are the financial instruments which can be converted into equity shares at a later date on predetermined price. Okay, so whoever is taking these instruments, later on, after some days, after some time, they will become at what? Equity shareholders. Then since they will be converted into equity shares, they are included under shareholders fund. Okay, so that's why we are writing what? Share money received against share warrants under share capital. Okay, under shareholders fund is saying. Next. Next is what? Share application money pending allotment. What is this mean? Share application money pending allotment is a separate line in between shareholder fund and non-current liability. So it is between non-current liability and what? Share capital. Okay, shareholders fund. These are the amount received towards application but not yet allotted. Okay, we have seen in issue of shares chapter, when shares are applied and it is been allotted, right? So we receive application money, allotment money, first call money, final call money. So here we have received share application money, but we have not given what? Allotment. The shares has not been allotted. That is he's saying. Okay, same he's saying, but not yet allotted. When they are allotted, then it will be included in share capital. It means what? The company has received only money on share application. Okay, and it has not been applied. It has not been allotted by the company. Then that's why we have to show separately. Next, deferred tax liability. What is the meaning of deferred tax liability? Net and deferred tax liability. Asset is, we are having two things here. Now see what he's saying. Every year accounting income is compared with the taxable income. Yes. So whatever income you are earning, the company, whatever income the company is earning, that will be compared with the taxable income. Taxable means what? Which the company has to pay tax on the income. Next, if the difference between the two exists which is temporary in nature, income tax on the difference is treated as deferred tax. So whatever there is difference between business income, tax, which income, a yearly income and taxable income, yearly income and taxable income, whenever there is a difference, that difference will be called as what? Deferred tax. Okay, it can be seen from the form of balance sheet. Deferred tax liabilities net, and under the non-current liabilities or deferred tax net appear on the non-current assets. Okay, I'll explain. Wait. Okay, I'll explain. When we solve the problem this time, I'll explain what is the meaning of how to treat this. So deferred tax liability, we know it means what? Whenever which income? Your taxable income, you compare your taxable income with your accounting income. There will be two incomes. Whenever there is a difference between the two, on that tax should be paid. It is called deferred tax. This only you remember. Okay, when it will become deferred tax liability, when it will become deferred tax asset, when we solve problem, that time explain. Easy. What is deferred tax liability? Deferred tax, what is a deferred tax? It's a difference between the tax accounting income and taxable income. Okay, on that the difference, you have to compare tax, the income, compute tax, that is called deferred tax. That's it. In exam he'll directly give you, no need of going in detail. He'll give you deferred tax liability or deferred tax asset. If it is deferred tax liability, write under liability, deferred tax asset, write under asset. That's it. That's so simple. Convertible and non-convertible liabilities, not at all important for us. Sorry, this is current and non-current liabilities. He'll directly mention. Current liability means what? That is to be payable within a year. Non-current, the liability which has to be paid after 1 year. That's difference. Okay, actually we have the three types of liabilities: short term, medium term and long term. Short term, within 1 year we have to pay, and long term liability, that we have to pay after 1 year. 1 to 3 years is medium term liability, and more than 5 years is called as long term liability. So simple, understand only current and non-current. Then long term borrowings we are having. So what is the meaning of long term borrowings? The company is taking money from outside. So how they are taking money? In the form of bonds or debentures, in the form of term loans, in the form of deferred payment liabilities, in the form of deposits. Okay, so understand. Then this is important. What you are saying, long term borrowings, the company is taking money from outside. They can take money in the form of bonds, debentures, or they can take money in the form of term loans, or they can take money in the form of deferred payment liabilities or deposits. Okay, next, borrowing shall be further classified as secured loans and unsecured loans. Okay, so the borrowings will be again classified as secured and unsecured. Secured means what? The company has given some security. The company is taking loan from outside and they are giving something as security, that is secured loan. Unsecured loan means what? The government, the company is taking loan from outside and not giving any security. That is called what? Unsecured. Okay, next we have other long-term liabilities. So we have trade liability payable, others. So long-term liabilities we have two. One is trade payable, other is what? Others. Okay, next, long-term provisions. Provisions which is for the employee benefits, that is called provision. Others what? Specific nature. He will mention specific nature for provisions. Okay, see, I'm not explaining in detail because it's directly given in the question that these points will be given directly, like trade payable, others, deferred payment liabilities. This directly will be given. So we should know under which head it will come. Okay, that's only we have to know. Next, short-term borrowings. Short-term borrowings we have what? Loan repayable on demand from banks or other financial deposits. And short-term borrowings means we are taking the loan for less time. Okay, within 1 year we have to pay. That is called short-term borrowings. He'll mention in the question. So deposits here also we are having. Deposits here also we are having. Okay, deposits. This is deposit which has to be paid more than 5 years. Okay, and this is what? Within 1 year you have to pay. In bracket he'll mention. Other loans and advances is there. Again, it is divided into short-term borrowings divided into secured and unsecured. Then when loans have guaranteed by directors and other, the aggregate amount of such loan should be disclosed. So whenever any director is giving loan, or he is giving guarantee, then also it will be called as what? Short-term borrowings. Okay, next, what? Other current liabilities. Other current liabilities, what all we have? See, what is important that I will explain you. Unpaid dividend is important. Unpaid dividend will be asked many times. This unpaid dividend we have to know. Other current liabilities we have what? Unpaid dividends. application amount for allotment of securities and due for refund. Okay, this is also what short other current liability. So what we have: interest due on bank loan, interest accrued on debentures, managers remuneration payable, unpaid dividends. So this is what application money for allotment. This is all what other current liabilities. You have to know whenever this you see, you have to know that this will come under other current liabilities. Next we have short term provisions. Provision for employee benefit. Here also we have employee benefit, and here also we have employee benefit. He'll mention in bracket within 12 months or more than 12 months. Other specific nature he has given. Tangible assets we are having. Okay, we know what is the meaning of tangible assets. Land we have, building we have, plant and machinery, furniture and fixtures, vehicles, other equipment, office equipments. These are what tangible assets. We know the assets. Tangible means which we can see, feel. Okay, those assets called as what? Tangible assets. Intangible also we know. Those assets which we cannot see, which we cannot feel, those assets will be called as intangible assets. So what intangible assets we are having? Goodwill, trademarks, computer software, copyrights, patents, and other intellectual property. This is all what? Intangible assets. Then we have other current assets and non-current assets. Okay, we know what is the meaning of current assets. Current assets means what? Which has to be which is giving benefit to the company within 1 year. Any asset which is giving benefit to the company within 1 year called as current assets, and which is not giving more than 1 year, which is giving benefit more than 1 year called as what? Long-term non-current assets. Non-current investments we are having. So we are investing in trade investment, equity instruments, preference shares we are investing. The company is investing in government, securities, and debentures or bonds. They are investing in mutual funds. So this is all called what? Non-current investments. Okay. Next, long-term loans and advances. The company is giving advances. The company is company is taking loans. See here, long-term borrowings. The company is taking loan. Here the company is giving loan. Here the company is giving loan. Okay, that's why long-term loans and advances. The company is giving capital advances we are having, security deposits we are having, loans and advances to related parties we are having. Again, securities, these loans are divided into 3 categories. One is what? Secured and good, considered good, unsecured, then doubtful. So then the company is also giving people, when they give loan to the people, they are taking what? Some security. Here they are not taking security. Here the company is doubtful that they will receive money or not. Okay. Next, provision for doubtful debts. This we know. Next, second approach, no need. Current investments. We have current investments. What are the current investments? If we invested in current investments, preference shares, instrument in government or not. See here and here you say the same. Investments. Here, where is the investments? Here. Here and here. They will mention which is within less. If it is less than 1 year, then it is current investment. If it is more than investment is more than 1 year, that it is what? Long-term loans and advances. Okay. Next, inventories we are having. What does inventories will write? We write in inventories raw materials, work in progress, finished goods, stock in trade, goods acquired for trading, stores and spades, loose tools. These all will come under inventories. Okay. Next, trade receivables. We know what is the meaning of trade receivables. Bill receivable, trade receivable. Okay. Next, cash and cash equivalents. So we are having bank money with the bank, or we have check drafts, or we have cash. We have money. The company is having money in the bank, or they are having checks or drafts, or they are having cash. Okay. Next, other current assets. What are other current assets? So if any asset is not coming under these categories, all categories we have seen, that will come under this category. Okay. Done. So next we have what? Contingent liability and commitments. So this I'll explain when we see in the question. Okay. So this is all what your balance sheet, assets and liabilities information which we have to see in detail. So let us see one question. So we'll see questions which will be asked in exam. So how the questions will be asked in exam. So see this third example. I think we have solved this. No, I want you to solve this third example. Okay. Now we'll see fourth one now. See what he's saying here, fourth one. So it's very simple. Like this will be asked in exam. What he's saying: prepare balance sheet of Spandana Company Limited from the details as on 31st March 2015. So he has given calls in periods. He has given. We know what to do. Calls in periods. We have to deduct from this. This from. I think we have done this problem. No. Additional information was not in the problem. Okay. Next, furniture we are having, plant and machinery we are having, share capital we are having, general reserve we are having, loan from MD. MD is giving loan, means it is a liability. Next, closing stock we are having, sundry debtors we are having, cash at bank we are having, prepaid insurance we are having, outstanding items we are having, wages, salary, rent, and we are having secured creditors, profit and loss account we are having, net profit we are having. Some more information is given. Declared dividends 9,000 to be provided. Transfer to general reserve is given. Ignore DDT, dividend distribution tax. That is what DDT means, dividend distribution tax, that you have to ignore. Okay, chali. Next, format. They have prepared a format. I'll explain here only. See what he has done. Spandana Company Limited balance sheet as of 31st March 2015. So for what he has done, he has drawn the format. So format we know, equity, equity and liabilities. We have tried 4 things. One is shareholders fund, non-current liability, current liability. This we have tried 3 items. Sorry, we are writing 3 items. Next, see here what we have tried in the shareholders fund. Tried share capital, reserves and surplus. Okay, here are 2 more things we have tried, but in the question it's not there. What are the 2 things? Money received against share warrants. See, these 2 things we have not written. Money received against share warrants is we have not written. Then here is what? Share application money pending allotment is we have not written. Because there is nothing in the information. The information is not in the question. That's why we are not writing. We are directly writing it. See here. Non-current liabilities directly we are writing. Non-current liabilities also we are not having. That's why we are not written. Then current liabilities what we are having, that we have written. So in balance sheet, when we solve the question solution, we have tried only those items which are in the question, right? Chali, next, again assets we are having, non-current assets, fixed assets we are having, current assets we are having. So there is a big format for assets. See, assets we are having, non-current we are having. We are writing under fixed assets, intangible, capital, work in progress, intangible assets under development, non-current investments. Like that we are writing a list. But simply what we have written here, we have written those information which is asked in exam, only those we have written. Okay, simple. So again, current assets what is given, that we have written. In current investments he has given inventories, trade receivable he has given, cash and cash equivalents, and short-term loans and advances is given. Okay, so let us start first with the notes and explanation. What all notes we have prepared? We have prepared share capital note, we have prepared reserves and surplus note, we have prepared short-term borrowing loan, we have prepared short-term provisions, fixed assets. That's it. Only 5 notes we have prepared. I repeat. First note what we have prepared. First you have tried the format. Next you have to prepare notes. So first note he is prepared, share capital. Second is reserves and surplus. Third is short-term borrowings. Fourth is short-term provisions. And fifth is what? Fixed assets. That's it. Only 5 notes he has prepared. This is first what he has written. Calls in arrears. So calls in arrears we know. Note number 1, share capital. We have tried 2,50,000. From that we have to deduct calls in arrears 5,000. Auto column 2,45,000. Done. Chaliye. Next, furniture. Furniture will come under, after preparing notes we have tried here fixed assets, furniture 15,390. Furniture. Next, after furniture what we are having? Plant and machinery. Again it will come under fixed assets. Come and write under fixed assets 68,425. Okay, so under fixed assets we have written plant and machinery and furniture. Done. Next. Next is what? General reserve. We are having general reserve 15,000. General reserve is 15,000. So you have to go to general reserve. Right? General reserves and surplus, general reserve 15,000. Okay. Next. Next is what? Loan from MD. MD is giving loan. So short-term borrowings, we are asking for short-term. So loan from borrowings what? Short-term borrowings we are writing how much? 16,000. Managing directing is giving loan. That's why writing what? Loan from MD 16,000. Done. Next we have closing stock. Closing stock is how much? 91,500. So closing stock where do you have to write? You have to write inventories. So directly we can write inventories 91,500. No need of preparing. Next we have debtors. We can directly write debtors as trade receivable. The other name for debtors is trade receivable. Next we have cash and cash at bank. So you can directly write cash at bank. Okay. Next what do we have? Prepaid insurance. How much we are having prepaid insurance? 1680. So you can directly write under short-term loans and advances prepaid insurances. Prepaid insurance is nothing but a type of advance. Okay. Paid in advance, right? That's why we written short-term loans and advances 1680. Next we have outstanding. What all outstanding we are having? Wages, salary, rent. These 3 things we are having. So we have to come. So directly as written directly as written in the solution. Short term provisions directly as written here. Other current liability, how much we are having? 5200. You will get 5200 plus 1200 plus 600. So we are getting 7000. When you add these three outstanding wages, salary and rent, you will get what? Here other current liability 7000. Done. Next, what do you have? Sundry creditors. Sundry creditors, we have trade payables. Trade payable means sundry creditors 4000. Next we have what? Profit and loss account, net profit. This is the last year profit. So what do we have to do? Here we have tried, we have to leave one line space. So we have written general reserves and surplus. General reserve 15,000, leave one line space. Then you write profit and loss account, opening balance. So this we have tried as opening balance. How much is opening? 12,000. So you have tried opening balance.